Hello, everyone. It's Steve D from the microefutures.com/equities ETC trading room. It is a Saturday morning, raining here in Florida. I'm going to take the opportunity to do a video on swing trading equities in 2024. Swing traded equities, swing trading indices like the SPY, the Q. I am going over not a magic formula. I am not going over anything that I suggest members or listeners should blindly follow. What I am going to do is to show you how I swing trade in the markets that we have been in lately. And a little background on the year 2023. It was a tale of two tapes, good and bad, for me personally. 2023 has been my best year ever for trading stocks. And that is due to the gains I had on my swing trading. I believe, after all my calculations are done, that I was a little bit shy of 40% return for the entire year. A good portion of that coming from swing trading. And as good as 40% is, believe it or not, I underperformed the market if you look at the Qs and the Qs, QQQ being the growth tech stock index, which was up over 50%. I believe the SPY was close to 30%. So my performance in 2023 did beat the SPY. Why is that important? And this is something that's very important to understand. Hedge fund managers, investment banks are judged whether they can beat the market indexes. So that is usually how a lot of individuals, their bonuses are tied into. So unless you had a year in which you beat the SPY and the Qs, if you did not, even if you had a very solid year of 30% plus returns, it is going to be viewed as underperforming the markets. So why should anyone care? Think about that if you're a client of one of these hedge funds or investment banks. You are paying them 2% of whatever money you give them to manage your money, plus you're giving them 20% of the profits. So why pay anyone those fees if you can just take your money and put it in the SPY and Q? So that is why the SPY and Qs are often on the institutional level, okay, the benchmark in which one needs to be in the year 2024, the current year. So a lot of you are in the equities ETC room, both the day trading room and the swing trading room, and a lot of you actually saw my performance in 2023. So the point of this video is not to brag how great of a year I had, but for you to understand my mindset on how I swing trade. And some of it may make sense to you, other may not make sense to you. I am going to say right up front, I am a simple trader. I try to block out all the noises. I could care less what and why things are happening other than if they're happening. So it doesn't matter to me uh, to know if it's short sellers spiking the price or if the buyers competing with sellers. I know a lot of you learn that business side of it in the micro futures room, and that is good. I just feel for me personally, knowing that stuff really doesn't matter because the charts and price action on a chart, as you will see, is ultimately what helps me execute. Now, don't get me wrong, understanding all of that is so important when you're new to get an understanding of market dynamics. But as far as executing your trades and profiting your trades, we like to keep it simple. And a little background on myself, I've been trading for now 11 years First 2 years, as I mentioned, I struggled. I lost a lot of money. I was mentored by the likes of Brian Shannon. I was mentored by the likes of J.C. Parrott and Barry Einstein from Trade Ideas. So a lot of my style is not copying their style, but a lot of my style is heavily influenced by them. So I did learn, I like to say, from the best as far as being active individuals that are long-term successful traders. But again, I do not advocate blindly following anyone. Create your own style of trading. In fact, I've yet to meet any successful long-time trader that blindly copied the style of someone else. So please don't do that with me as we discuss what we're about to discuss. We are actually going to look over some live charts, okay, that I am looking at or will be looking at to determine should I set price alerts for swing trading or shouldn't. So we're going to get an actual opportunity of me doing a trade review, okay, live. But first, I want to go over this slide that most of you should be seeing on your screens right now. Okay, the first slide that you're looking at, I mentioned shorter term moving averages on the daily chart. As a swing trader, and this video is about swing trading, I will be using daily charts because that is what I choose to use for how I swing trade. Now, there are many successful traders that might use a monthly, that might use a 60-minute, that might use a different time frame chart. That is okay. Okay, whatever works best for you. Since I am doing this video and it's based on how I trade, all right, I use the daily chart for swing trading. Okay, Steve, and I'll put Oliver Kell because Oliver Kell is a highly respected trader, swing trader. I believe, one or two U.S. Investors Championships, which is a highly competitive and highly coveted contest for trading. He's won it in the past, uses the 10 EMA and the 20 EMA as a shorter term moving average on the daily chart, while others like Brian Shannon, who I consider a mentor, will use the 5 day moving average. So the point of this is the exact number on the moving average that you use is highly personal. It's up to you. There is no magic bullet other than make sure you are using some sort of shorter term moving averages that you are comfortable in following price on. Now, the reason why I say shorter term moving averages, a longer term moving average might be the key 50-day moving average or the key 200-day moving average or others, but the shorter term moving average will give you a good picture of the price trend of that stock on a daily level. And you'll see it more when I go through examples. Okay. They're very important on the daily chart because they will tell you if you are bullish or bearish at that specific moment in time for that stock. It keeps you out of a lot of trouble in trying to guess tops and trying to guess bottoms. And it really helps with confirming the direction of price. Okay, which leads into the importance of slope trend for whatever short-term moving average you may be using. All right, reason being, and again, we'll go over examples, is it presents to you a low risk versus a good reward entry. Often you will enter your swing trade right above a sloping moving average, all right, with your stop on a daily candle close right below that moving average. So the distance between your entry and your stop is very small, thus small losses. It keeps your losses small while it gives you the potential for large gains if that stock wants to continue trending higher or trending lower if you're shorting. Okay. We talk about the importance of a smooth price action along the moving averages. What we are looking for is not a stock that is spiking way above whatever shorter term moving average that you are using. We are looking for a stock that is hugging the moving average and slowly trending up, often indicating smooth price action, smooth buying, or smooth selling. Okay, coming often from institutions. But again, whether it's coming from institutions or not, or short sellers or not, really doesn't matter to me because price along that moving average will tell me everything I need to know. Okay. We also will be looking at price that is spiking above the moving average, meaning it's no longer hugging it and slowly, smoothly trending up it, but spiking way above it, which is a good thing if you're long. But that often will be areas where you'll be locking up some of your profits, selling, maybe selling half, and then trail stopping the rest in the money. So if it continues to want to spike higher, you at least have half shares in it. All right. Trail stopping it. Should it reverse on you, you've already locked up profits by selling half. And now the other half, you get trail stopped out while you're still green and you have yourself a nice trade. We'll also talk about support resistance. A lot of you call that supply levels of interest by always looking left on the daily chart. And we'll go over some examples to see where support resistance and supply levels are. All right. Often where support, resistance, and other levels of interest will be, whether you believe it to be true or not, does not matter. Understand that. Whether you believe support or resistance levels or key moving averages or VWAP or support, resistance, or levels of interest doesn't matter if you believe it because others do. So it's not what you believe, it's what others believe in. Many buyers and sellers and machines, algorithms will look at key support resistance levels of interest, and often transactions will take place at those levels. So we'll look at that. And we'll also look at why consolidation and sideways action is important. Why we look for consolidation, all right, as long as it's above whatever moving average that we are using, all right. We look for a possible continuation up if the previous 3 months the stock has been trending higher because price in consolidation will tend to break out in the direction of the previous 3 months trend of the stock. So if the stock is trending down the past 3 months and hits consolidation, often, not always, because nothing's ever black and white in trading, often, okay, price will continue a trend down when it breaks out of consolidation, and vice versa. If a stock's been trending long the past 3 months, now hits consolidations for a week or so, all right, often we wait until it confirms it wants to break back up again, all right, because often it will break back up in the same direction that it did the past 3 months. And we talk about the importance of not being stuck in sideways consolidation, but waiting for the confirmation break out of it. Because often, if a stock, as Brian Shannon likes to say, does not stop you out, a stock will wear you out. So consolidation can go on for long periods of time, and you don't want to be tying up your capitals stuck in sideways action. So sometimes and often it is important to wait for that break. And we'll go over, hopefully, some examples of that. Why do I say hopefully? Because the charts we are about to look at are coming from my trade idea scans, my swing trading trade idea scans. These are scans that I coded, I programmed, real simple with trade ideas. If any of you are interested in getting trade ideas and using trade ideas, make sure you direct message me because I can get you the best price that they offer. But their charts and scans are absolutely fantastic. I just put in English, basic English, what I am looking for. It does all the coding for me, and then it provides me scans in which I can backtest and tweak to find setups that I like. So, with further ado, let's start our trade review. So, what I am looking to do right now is switch screens. Let me just move this up. And you're looking at a basic trade idea screen. Over here, we're going to go over the importance of the profile of the company. And notice how Trade Ideas gives me all of this. So it's a quick snapshot look. We'll talk about how I set price alerts. And these are three common swing trading scans that I like to use. The composite rating scan, which is on the bottom left where you see the cursor moving, is a scan that factors in financial fundamentals of a company along with the technical analysis and good looking charts. So it combines them and it comes up with a score. And I usually like to see a composite rating score above 90. Then I have swing trading, the 10 EMA scan. And what I'm looking for in a swing trading EMA scan is stocks that potentially have the opportunity to smoothly trend up the 10 EMA. And then we have the trend change pro reversals. There's not a lot on it right now because the market had somewhat of a down week this past week. Um, this will be a lot more once the market comes back up again, if and when. But the trend change pro reversals, we'll talk about stocks that have been trending down that have now confirmed that they want to go back up again. Now, do I blindly follow or trade every stock that gets alerted on these scans? Absolutely not. In fact, I will say a good majority of them I will not. What I will do is pull each one up, usually on a weekend or midweek, to see if there's any charts, daily charts, that I'm interested for a possible swing. So, speaking of daily charts, let's look at the four moving averages I have listed on my scan, on my chart. First is blue. It's a longer term 200-day moving average. The maroon is the 50-day moving average. Again, these are longer term moving averages, so they're not the shorter term moving averages I mentioned on that slide before, but the blue is the 200-day, the maroon is the 50-day. Now, the green, and this is important, is the 20-day EMA, and the orange is the 10 EMA. So again, for the sake of our review here, we're going to be looking at the trend and sloping of the green as well as the orange. Green being the 20 EMA, orange being the 10 EMA, for those of you who would like to take a look at it. Okay, so let's start. Okay, let's start with the composite rating. So I'll go to the composite rating. I'll click on MUFG, which is Mitsubishi, and I'll take a look at this daily chart. Let me see if I can make the candles a little bigger, make it easier to see. Okay, there you go. All right, so I'll take a look at this chart. First thing I want to look at is I like to look left first. I like to look to see, am I seeing any sort of congestion, consolidation, which I am. I'm seeing an ugly looking chart if I look sideways. Ugly being up, down, up, down, up, down, up, down. You might want to call it range bound. My swing trading style is more trending. So I'm looking for trending plays. Um, I don't see, right? I'm looking at the moving averages, the orange and the green. And what I see in the orange and the green is more sideways action with a gap up. Okay. Now price is way above those moving averages. And remember what I mentioned earlier, when we usually get priced way above the moving averages, if we were in the trade, we look to be exiting. So I have no interest in setting a price alert for this stock. So let's look at next is NVIDIA. NVIDIA is interesting, okay, because NVIDIA tends to trend, right? It goes in periods of up and down, it tends to trend. However, what I don't like about NVIDIA, and this is a key point when I look left on the daily chart, is look how it is above those shorter term moving averages at times, the green and the orange, and then drops below it. So it's not using the 10 EMA or the 20 EMA as support. It has a history of trending at times, yes, but also has a history of quickly coming below it. So again, I am looking for good rewards versus good risk versus good reward trades. I like to have at least 3-to-1 for my profit factor. I know many of you out there are 1-to-1 and are scalpers which is the toughest way to trade for a new trader. I know everyone thinks scalping is the easiest because you're quickly getting out. But believe it or not, scalping is probably the hardest because you are not getting behind the momentum of a stock that can run for good profits. Now, everyone has a scalping strategy. I even have a scalping strategy, but for the sake of swing trading, I am looking for more trend type plays, and this NVIDIA doesn't give it to me. So let's look at DVAX. Okay. DVAX, same thing as NVIDIA. The first thing you should be doing if you're thinking like me is looking left on the daily chart. You see up, down, up, down, up, down. You see above the moving averages. You see below the moving averages. No trends. All right. What we're looking for is that smooth price action trending up the orange 10 EMA and the green 20 EMA. Okay. GCT. Now, GCT, okay, is a stock that we're looking for. Because if we go back from December 1st, we notice it has trended up to 10 EMA. In fact, if you look at where it's pulled back to, it is pulled back and used as support to 10 EMA. Now we see consolidation. Now we see it consolidating. And often what consolidation, I know all the reasons, what the buyers and sellers are doing here. It doesn't matter to me. All I know is when I see consolidation, it gives the opportunity for this EMA to catch up to price or price come back down to the EMA. And I look to see if it wants to hold as support again to start another leg up. Okay. So would that mean I take this trade right now? No, but I want to see what it's going to do at the 10 EMA when either the 10 EMA, the orange goes up to price or price comes down to it. So which way is it going to break out of consolidation? So what you see me doing right now is setting a price alert. Okay. And I will put here is 10 EMA. So I put a comment, catching up to price. And I click save, and you see that blue line, all right? When the EMA comes up and hits the price, I will get an opportunity, okay, here to get a price alert down here, and it will alert, all right? So I simply set this price alerts now to see when price and the EMA comes together, it will alert for me, and now I forget about it. I don't have to keep it on a chart because it will alert for me. And here's an example of price alerts that alerted for me on Friday. When I click on working, that just lists all the price alerts I have, and we're adding to them right now. But when you see these, it's when it gets triggered. All right, so when I get an alert that it triggers here, I have the opportunity to look at the chart to see if I want to take it as a trade. But for GCT, I just set the price alert and forgot about it. VST, VST is the same thing. Look at VST. Look how it has been trending since late October. Trending up, sideways, consolidation, trending up. Look how it's up, comes back, holds a support, breaks out of consolidation, goes up, consolidates again, comes up, consolidates again, comes up, and it looks like it possibly wants to break out of consolidation and go back up again. Doesn't mean it will. All we're doing now is setting a price alert to see if it does. So I am going to set a price alert at the high of the day, click it on. So now, should price hit here and breaks above, I have a possible entry for VST to continue up. Okay. One thing I want to show you, okay, is why when price, and follow me here, when price spikes way above the moving averages, why I do like to sell half, all right, and trail stop it. Because if it's a type of trend trading trade I want, all right, I know and want to see it pull back to the 10 EMA to smoothly trend up it. This actually, although it's good from a profits perspective, all right, is more a momentum play, okay, than a trend play. So that is why when you see it pop like this, all right, I will take profits and get out quickly. Should price drop below the moving averages, below the green, the 20 SMA, on a candle close on a daily, so it's not a midday close on it. I mean, if we're using a daily candle, we have to wait for the daily candle to close. So should price close below, if I was in this stock now, I would exit. But if it dropped below it midday, I would not. All right, because hey, it's like a baseball game. The baseball game's not over in the fourth inning. You got to play all 9 innings. Same thing, if you're using a daily chart, you want the candle to close on the daily chart first, because that's what your whole strategy is about. No different if you're using a different time frame. Hopefully that makes sense. So VST, I'm interested in if it breaks above. Now, will I take it? I need to see what the market's doing at the time when it breaks it. I also need to see, did it break it pre-market? Doesn't mean much to me if it breaks it on light volume. I need to be consistent volumes. Which brings me to my next point. I tend to swing trade floats of over 100 million. Reason being is it is very hard often to manipulate the stock price from insiders and others of stocks that have a float of 100 million or more. All right. Now, I am not a conspiracy theorist. I know many members in our room think everything that ever happens in the stock market is manipulated. Listen, I understand that happens a lot in penny stocks. I understand it happens in other stocks. But the reality is, if you're always going to be a conspiracy theorist, you're going to miss out on so many good opportunities. Let price on the chart and the profile of the company tell you most likely what may or may not happen. And with large floats, you tend to get smoother price action, which should make sense. I also look at the short float percent. I want to see, is the stock being heavily shorted? Because if it's a high short float of, say, over 20%, I know that short squeezes are very possible. With a small short percent, okay, it's highly unlikely that a price increase is coming from shorts. Most likely, it could be coming from new buyers stepping in. But again, do I really care about that? Doesn't matter. It doesn't affect the way I trade. It's just good information to know. Okay. Next thing I look at is, all right, you know, does it have earnings coming up? All right, because those are news events that can move the stock up and on. And then the rest just gives me a basic profile of the company's financials, revenues, cash, market, so on. I can even configure this to show me the percent that institutions own. I can show me the percent that insiders own, but I don't want to show you all of that right now because I know many of you, if you see stuff like that, will just assume prices being manipulated any way the big boys want. And I don't want, for the sake of swing trading equities, that you always to be thinking that. I'd rather you be focusing more price on the charts and on the moving averages and how they move. All right. All the outside stuff is just you assuming, you thinking, and assumptions, thinking, feelings have no place in the way I trade, all right? Because assumptions can be wrong, feelings can be wrong, and let's face it, we are not going to outsmart the smartest Ivy League minds on Wall Street or computer algorithms. Mostly machine learning algorithms right now. It's simply not happening. So what we think and what we feel, all right, is so difficult to do, especially in 2024, where everything's becoming computerized and the whole way that trading is taking place is so much different than how trading took place in the past. So we have to adjust with the times. Now, price on the charts clearly do not change. Price on the charts can clearly show you what is or isn't happening. But to understand the complete details, for many of you, it just bogs you down and confuses you. So let's continue. NRG, NRG. Now, if you're looking at NRG, you're saying, Steve, this looks really, really good. I mean, it's hugging the moving averages, the orange, the 10 EMA. It's trending up. It's getting consolidation. Let's look at it from October, right? Consolidating, trends up. Consolidates back down to the moving averages, goes up a little, consolidates back to the moving average, moves up, spikes up. We probably get out here, okay? Comes back, moves up again, pulls back, okay, held again as support, comes back up, consolidates, back up again, and now it's consolidating. So in your mind, should be saying to yourself, I can get a good low risk entry once it breaks out of consolidation. I wouldn't enter it now because it can consolidate forever. And as Brian Shannon said, if it doesn't stop you out, it will wear you out. It could wear you out staying in it. But we like to see a break out of this consolidation higher. And it's a good chance it may do that. And the reason why it's a good chance it may do that is because of that concept that the CMT teaches, Certified Market Technicians Association, that consolidations will tend to break out in the direction of the previous 3 months. So, what's been happening the previous 3 months? This stock trend has been going up. So this consolidation stands a good chance to continue up. All right. Now we can have a stop right below the 10 EMA. I would have a stop right below the 20 EMA, excuse me, 20 EMA. All right. If we enter this on a breakout above that blue line. All right. So it'd be low risk, high reward. All right. You see what I'm saying? You take small losses and you don't even think about it. If the candle closes below these moving averages, you're out. No thinking, no moving of, all right? But we do let the candle close first. Since they're high afloat, 200 million, very rarely will the stock tank on you during the day where you take such a big loss. So you can wait for the daily candle to close below the moving averages. Now, would I enter it now? No, I want to see it close above this blue. So the same concept of waiting for the candle to close on an exit, often, not always, you want to wait for it to confirm that it wants to break above out of consolidation and continue the next move up. So this is a very good example, NRG. Now, knowing that NRG is in the energy industry, now you do have to think a little macro, right? What's going on in the Middle East right now? What's going on with the oil tankers and everything? Geopolitical, something could happen over in the Middle East that can affect oil prices, and obviously that would affect this price chart. So, yes, there are times where you need to understand the geopolitical aspects of what could move price. And since this is an energy company, understand that geopolitical events could move it. Now, would I base any of my trading decisions beforehand on that? Absolutely not. My trading decisions based on what I'm explaining to you right now. NRG is a good example. Let's look at METS. METS, you might say, well, it's starting to trend up, Steve, but this is a good example of look at where price is now compared to where the 10 EMA orange is at. Price has spiked above it. If anything, if we were in it, we'd be looking to get out of it or selling half to get out of it. So I have no interest in entering a stock who is this far above and not hugging those shorter term moving averages we discussed earlier. So no trade price alert will be set on METC. HIG, HIG, again, see how simple this is? I bet you each and every one of you listening to this now know exactly what I'm going to say. Okay? So what am I going to say? I'm going to say we have a stock that has been honoring the 10 EMA, 20 EMA, has been trending up with some consolidations back to the EMAs along the way, and right now looks to be doing exactly the same again. All right. So I'd be interested again in setting a price alert above that high today to see what it wants to do on Monday. Now, I might go less size only because it's starting to break away a little bit from the 10 EMA, but it's not that much that I wouldn't want, okay, to be alerted when it breaks up because it looks like it's breaking up again out of that consolidation. The other aspect I want to bring to you is look at this candle right here. You see that little wick? Notice how that wick fell below during the day to 20 SMA. Had we used an intraday midday stop that anytime price fell below the 20 SMA, which would be our stop area. If we would have exited midday, all right, we would have missed out on this run. Because notice the candle closed that day above it, so we would not have exited. Right? So this is a good example why you let the candle close. Midday, you would have been stopped out. Okay. If you waited for the candle to close on the day, you would have stood in it and you would have enjoyed this run up. Hopefully that makes sense. Next is X. X really, background on X is they're possibly being sold off. They have some bids. I don't know the latest if they actually have a signed contract yet. But usually when you see a large gap up like this with consolidation like that, that's usually this chart is a sign of a buyout potential acquisition chart. So no interest on X. So let's look at some of the swing trading 10 EMA scans. Now, the swing trading EMA scan, we're looking for exactly what we looked at before. All right. It's just a different scan with different parameters that I use to get alerts on. If you notice, you'll see some symbols appearing on both. That doesn't mean both symbols, if that one symbol's appearing on two scans, it's stronger than another. Because if you look at MUFG, which we looked at earlier, we have absolutely no interest in this stock chart anymore. And you guys could see it now, right? Now, when we pull up MUFG after listening and me showing you what I like to trade and set price alerts on, you can see how this daily chart for the type of strategy we're using, a trending swing trading strategy, is really garbage. But let's look at DVX, same thing. Okay, we saw it earlier, and now you guys can see why we have no interest in this stock. So let's look at one that has not appeared on both, and I am not finding any. Okay, well, here we go. We got one. CRBG did not appear on a composite scan. CRBG is interesting. This was a stock, okay, that would have been an excellent swing trade on a few days ago because we had the consolidation, it hugged into moving average, then we had the breakout, right? I wouldn't be interested in setting a price alert or possibly trading it now. You guys give me the answer. I'll give you a second to think why. And the answer is it's spiking too far above that moving averages. If anything, if we did take it a few days ago, we'd be looking to sell half now to lock in profits and trail stop the rest. And that trail stop, you might be asking, well, what would my trail stop be? It could be 20 cents if I'm a conservative trader. At worst, it will be at my entry. But if the stock keeps spiking way above my entry, why wait for it to pull back? I'll trail stop at like 20 cents. But again, that's really a personal preference. What I won't do is trail stop where I'll lose money from the sale of those half shares that I locked in profits in already. So hopefully that makes sense. Holly is another one that did not appear on the composite rating scan. And Holly, I don't like it because I see you've seen too many gap up as Holly. All right. Also look at Holly. Why are we seeing a chart with so many ups and downs and gap ups? Look at the float size. Follow my cursor. Float size under 1 million. And what did we say before? We like swing trading stocks with float over 100 million, okay, because price tends to trend more smoothly than up and down. Because when you have a float this small, yes, people, insiders, manipulation can take place. Okay, and people move the stock with large buys and large sell orders. All right, let's go to the Trend Change Pro Reversal Scan and a Trend Change Pro Reversal Scan. We're looking for stocks that are trending in price, AMLX. Let's pull it up. And as we can see, AMLX is starting to trend up. Actually, it's been trending up for some time. Now, again, few concerns I have. It's also trending up, filling this gap. Look at the gap down. It's filling that gap. And it's very possible it is going to fill that gap back up to around that area. Okay. However, two things why I don't like this. Now, I'm not saying it's not filling that gap and going up to $17.60. What I'm saying is it's not surprising me that price is slowing down a little bit. Notice it went up and now it started to consolidate a little. One, price is way above those shorter term moving averages we use, right? Okay. But also remember the concept I said, always look left. You want to look left for supply, resistance, support area. If we look left, yes, we see that gap fill, but we also see this area. See that area where I'm circling this consolidation? That is what you kiddies out there call supply. I call it resistance. Okay. Whatever you want to call it, it doesn't matter. It just means to me that you're going to have interested possible buyers at, excuse me, sellers at this area looking to possibly sell to slow down the momentum of this stock. Okay. Yes, often, okay, the first buyers to step in are shorters that are covering, but I am more concerned that this is a level of resistance that a lot of eyes are going to be on. A lot of buyers are going to be looking at that. A lot of sellers are going to be looking at that area, and a lot of machines and algorithms are going to be looking at that area. So by looking left and seeing this congestion, it tells me price may slow down at this area, whether it slows down and consolidates or whether it actually reverses, okay, time will tell. If it slices through this area, often it won't be shorts covering anymore. It will be new buyers initiating as it just blows through this area. I'd be shocked if we see it just slice through and blow through. I'm suggesting at this level by simply looking left, and I don't even need to know who these people are. By looking left and seeing this congestion, this resistance, seeing it price way above those shorter term moving averages, that this price should be slowing down. So hopefully I am making sense. And please re-listen to this and understand my concepts. Remember, I'm not giving you black and white enter exit areas. I'm trying to explain to you how I look at daily charts for possible swing trades. Let's look at the last one, CTLT. CTLT. Okay, I'm looking at CLT. I'm not really, again, the first thing you should know by now is I'm going to look to see has price ever dropped below those shorter term moving averages. And we see here it has, we see here it has, we see here it has. I'm just not confident. We also see it hitting up to the key 200-day moving average. We didn't talk much about the 50 or the 200-day moving averages because this was more a swing trading. But when I do see price come and hit a 200-day moving averages, whether you believe in the 200-day moving average or you don't believe in the 200-day moving average, doesn't matter. Other people do. And if other people believe in the 200-day moving average, which they do, that means buyers, sellers, and machines and algorithms are going to be at that area. And if you notice price when it was spiking up, it hit the 200-day moving averages. And what did it do? Price slowed down, pulled back, came back up. Now, it did close above the 200-day moving average. The question I have, is it going to retest it and come back down on Monday? Or is former resistance, the blue, now going to turn into support? All right. And that's still to be seen. So many question marks. And then we look left on the chart and we see some more congestions up at this area, right? You see the area where we see congestion? Okay. Buyers, sellers, supply, if you want to call it. Just as too many unknowns for me to look at this as a smooth trending potential swing trade. So I would not set the price alert. So hopefully this helps, explains why I traded. It probably explained why I had such a good 2023, best year ever. The market was up, okay, tremendously. It'd be egregious when the SPY is up over 30%, when the Qs are up over 50%. It'd be egregious not to make money. Okay. And just because other people didn't make money in 2023 when a market was up so much, okay, those are the people you don't want to associate yourself with as far as sympathy. Okay. You're just confirming the bias that you traded poorly in 2023, didn't make money when you should have made money, and you're looking for other people to agree with you that the market was tough and I didn't make money. Because had you used the exact trend trading strategy that I just showed you, you would have made money because the market went up and so many stocks, even if you just traded the SPY and the Q went up last year, you would have made money. The way I presented this is I give you good risk management. So the trades you take are low risk. So when you lose on your trades, all right, you're losing very small. But if the market wants to continue to go up and it's hugging that moving average we mentioned, you're going to have some massive gains. And that's exactly what happened to me in 2023. So um, hopefully you enjoyed this video. Hopefully you got something out of it. And if you have any questions, stop by the equities ETC room, the live day trading room, as well as the live swing trading room, where often I will post some of my trades. I'm trying to take less this year, only because I'm 61 years old now. I've done pretty good in my life, so I'm trying not to be married to the screens every day. But I do love trading, so I am there often, posting comments. So I want you all to think in 2024. All right, think what style of trading makes sense to you and that you're comfortable in trading. And don't trade scared. Okay. Don't trade scared. All right. But trade with good risk management procedures in place that will protect you. And if you have that in place, okay, understand that the fear goes away. Also, why is it somewhat easier for stocks? We have all these different symbols, right? So if one symbol is garbage, like MUFG was this chart that I'm putting up, we have so many others that we can look at to find a smooth trending trade to our liking. Okay. Where if you just trade an index, all right, you're just stuck. If the index is looking like this MUFG, it's almost forcing you to scalp or forcing you to do a type of strategy or setup that's just not optimal. That is higher risk than you think. You're like, well, I'm going to get in, I'm going to get out real quick. Believe it or not, your risk is so much higher, bleeding to death on so many small losses or tilting, versus finding a good setup that has built in risk parameters for you, like we just discussed. So hopefully that makes sense. If not, feel free to direct message me. Have yourself a great day. And that's going to be it.